Welcome back, ladies and gentlemen, for another YouTube video. Allincrypto here, and today we are going to be delivering another daily cryptocurrency market update. And if you are new around here, every single day at 1 PM UK time, we release an update just like this one to help you stay up to date with the latest and greatest things happening within the crypto space and also the broader markets. And that's exactly what we're going to be doing in this video. We are actually going to be focusing on the broader markets predominantly. We're going to be bringing up the dollar and looking at how we've seen real dollar strength with the rise of inflation. That's also led to a lot of uncertainty in the markets. And that's one reason the dollar gets strength in these kind of situations. Of course, we know what's happening with the bond market. And of course, these sort of risk markets, equities, gold, and of course, crypto has sold off in line with dollar strength. Now, we've got a lot of economic data coming out this week, which is going to factor into this. But it does look like, and we did highlight this on Friday's close for the equity market, the dollar, the DXY, I should say, more specifically the dollar index, but also against other currencies, it's running into resistance like the euro and the yen. Yen basically nearly at all-time highs. But there is likely going to be a turning. And actually, the problem that you've got is markets are very correlated with kind of risk on, risk off. And we've been seeing quite a risk-off macro tide that's been largely against risk due to inflation and a very strong dollar. That looks like it could be turning. And we are going to be highlighting that and showing you that in this video. We've also got a number of other things that we're going to be getting into. It's going to be, like I said, quite a kind of economic sort of market-focused video. We're going to be talking about banks and potential stresses that are there with the bond market. It's my opinion that the Fed will not raise rates again with the bond market in the state that it's in. And the reason being is because they're ultimately going to have to pick the check up for whatever damage they do from here on out. And we're already seeing a lot of banks very stressed. Most banks have huge holes in their balance sheets as a result of the bond market. And that's only going to get worse as things continue. We're also seeing the yield curve come a little bit back down, which is good for us, believe it or not. Because it means we get that longer runway until we think a recession happens. And then we're going to finish things off with Paul Tudor-Jones actually talking about Bitcoin. So let's get into the video, guys. First of all, if you guys haven't already checked out our website, allincrypto.com, please come and do so. We've published a load of, we're one of the only news outlets that covers the smaller altcoins and the smaller projects. We covered, obviously, the Bitcoin smart contracting yesterday, lots of things happening with quant, institutional appetite coming back, and we look at that technically. And of course, today, the European Union's kind of regulatory body for markets published a report on DeFi, which was absolutely excellent. But let's get into what we want to talk about this video. So on Friday, you hadn't had this candle yet, and we looked at actually how this is a kind of shooting star, a really hammering wick that essentially may be suggesting a turn for the dollar. Now, why the hell does this matter to us as crypto investors? Well, this is the SPY. We know the correlation between crypto and the stock market. And this, of course, is Bitcoin. And you can see both of these charts, the SPY and Bitcoin, really ran into resistance at the same time that the dollar started to gain a bid. Now, why did the dollar gain a bid? If you guys haven't already seen my interview with More Crypto Online with Ben, please do go and check that out, because I'm really unsure about the dollar. However, he does have... This is just a corrective wave in what is going to be a broader downtrend, which is going to align with our sort of broader views on the market. I know you guys holding altcoins. I am holding altcoins again. We've been buying altcoins since the start of the year. We'll see whether time proves us right on that decision or wrong. And honestly, we continue to sort of DCA into this market. But I know how trying it is. But there is going to be a turning. In my opinion, crypto spring is well and truly here. We've just got to... sort of get through this correction and see that upside. And actually what we're looking at today could be that turning potentially, that sort of bigger wave to the upside, the continuation, the targets that we have to the upside getting hit after we faced a little bit of a headwind with, of course, the dollar being strong. Why was the dollar strong? Well, of course, it was on the back end of inflation. If you look at the higher inflationary print that we had for the first time after nearly a year of downtrending inflation, it was on July 2023. And you can see this is at the exact point the dollar turn. So this is what we try and do on these videos. Of course, if there's any big crypto news, we'll always cover it. But we really try and give a deeper understanding to the sort of mechanics behind things and the broader context of the markets and where crypto finds itself. Crypto is set to become more and more of a household name. It's a $1 trillion market. Let me tell you, you guys are unbelievably early. And how many people do you really think are playing in the crypto markets right now? It's something we've highlighted certainly over the past sort of 4 months. It's very low volume, et cetera, et cetera. But back to the topic at hand, okay? So the dollar's been gaining strength. This has largely been a macro headwind for, it has been the macro headwind, a representation of the macro headwind for obviously Bitcoin and the stock market. And you know what? We could even probably chuck gold on there. I'm sure it would look somewhat similar. Yes. So it actually looks like the Bitcoin chart. And now you can see that these are starting to get a bit of a bid. What I want to do is take these off. We'll come back to the dollar and we'll just finish on what we were looking at on Friday. A little bit of turbulence. We've been validated with the stock market with it sort of popping its head back up and continuing to do that. Gold, of course, has done quite well. The only thing that's not is the crypto market. And obviously right now, not to mention the situation that's happening in the Middle East, it's a horrific one. I'm very familiar with the history of that region in the Middle East. I spent a lot of time studying history and the kind of things related to it. But of course, you have had negative crypto news come out of that, which is the least of their worries. And I hate to trivialize the situation by relating it to the markets and certainly the crypto markets. But you have had things like bank accounts being frozen, stuff like this, which has a bit of a negative impact on the crypto markets. But to go back to the task at hand, so we had this sort of shooting star for the dollar. And at the same time, we had this close and we've got this week open for the equity market. So we were largely valid on our kind of opinions going in. The equity market looks like it wants a turn. I actually think that Tesla, I hope I haven't got any draws on here, is going to make its way up to this region here. So there's a lot of things that we're seeing that give us confidence. We did a whole Patreon video on crypto stocks or crypto related stocks that all seem to be sort of validating what we're saying. And then of course, Bitcoin looked okay with this, but it's sort of coming into a bit of resistance. I actually think it's going to turn its head with the broader markets. Let's go back to the dollar and let's look at where the dollar currently is and bring these charts back on. So the dollar has really been that macro headwind. You can see as these markets sell off, the dollar's gain strength. Is this on the turn? Well, not only do you have this kind of shooting star, you've also potentially got a falling out, and we'll get rid of these actually. And actually this a lot more clearly illustrates it. Look at where the market started selling off at the same point the dollar started turning to the upside. So we need to see a reversion in that dollar strength to support the crypto, stock, and equity market. Oh man, this is annoying that it does this. So the dollar has essentially been in an uptrending channel. Have I got any draws on here? Only a couple. That it may be about to roll out of potentially. And this, if we do get this, is going to coincide with likely crypto doing this. Again, correlation. And we think that there's a few signs that are looking like markets may have turned. And the dollar strength is obviously had a lot to do with inflation. Just quickly, guys, in the US, a year to date, they reckon we've had about 20% inflation on your goods. Craziness. Inflation is a tax on everyone. But we've got a lot of economic data coming out this week. A lot of inflationary data. Of course, we've got core PPIs. I personally think that a lot of this data is going to come out better than expected. And that may quieten the dollar somewhat. And we've already got technical foresight that the dollar may be at a bit of a turning point. Based on not just the dollar candle, weekly candle, but more based on actually how the other markets are aligning with that weekly candle. They're kind of confirming it, if you will. And actually the week's open has really suggested that. But there's still a lot to factor in. Of course, geopolitical risks don't typically help other assets and more go towards the dollar. So we've got a lot of data coming out. I think you're going to get better expected. I think the CPI is going to come out better than expected. This is the forecast for the CPI coming out at 3.6. I think it can come out a little bit lower. And that may actually put a little bit of wind back in the market sales to see the dollar sort of slow down a bit. And I'd mentioned the dollar's coming into some key resistance levels. I looked at all this with my Patreons, resistance, an area of significance, but certainly the euro. We've looked at lots of different things. So all of this data is going to really affect the driver, which is the Fed. I personally don't think the Fed are going to go too much further with what the bond market is doing. I believe the this is a tweet from Lawrence McDonald. I believe the Bank of America is insolvent with a 6% Fed funds rate. Leverage explodes if your core capital is impaired. Any loss on tertiary assets, credit cards, commercial real estate, which is getting hit. Bank asset-backed securities are exponentially painful. This is a veteran banker calls for TARP 2.0 in OPED. to help banks with steep unrealized losses of their securities holdings. Proposal would lend up to $1 trillion against securities that have lost value to the Fed's meteoric income in interest rates. This is a very interesting thing that we're going to watch. The roads lead to the same place, in the sense that hard, soft, no landing. The ultimate reality is that the Fed are going to continue to proliferate the system. It's the only way that it works. The question is what does the road to getting to that look like? Is that going to be a painful one that's going to see that hard landing, capitulation in the bond market? Likely then they're going to have to step in, obviously with the real estate market as well. You know, banks are absolutely stressed. And this is why I don't think the Fed's going to go too much further. I don't think you're going to get 7-8% interest rates like JP Morgan are calling for. This is debt. Bit of a bid, pre-market real bid. And this is going to support the equity market and risk off. Also, if you look at where this really started getting aggressive to the downside, we're just going to throw every chart we got on TradingView here, guys. Look at this. So we need that turning in the dollar to support us. We've been swimming against a macro tide. We call Bitcoin a paper bag and a number of other things to people's disgust. Although Bitcoin maxis, I honestly don't think really have that much of a clue what they're talking about. Banks are in trouble and they need this. And the other thing as well is another interest rate sensitive market is real estate, which we looked at. You know, is this just a retest of what's clear support being taken? Maybe we'll see. What I want to do now, guys, is actually finish things off with and we know the central banks will step in, by the way, with any capitulation. We've already seen that with the gilts in the UK and, of course, the Silicon Valley bank issues. What I want to do now, guys, actually finish off with a clip of Paul Tudor Jones giving his take on things, and then we'll wrap the video up, and I'll love and leave you to your wonderful Wednesday.
I said I wanted to talk about Robinhood, but I also just looked on the screen behind you, and I saw the price of Bitcoin. And I know every time we've spoken, you've had a take on Bitcoin. Do you have a new take? Still holding?
I think now the barbarous relics, and I would lump gold and Bitcoin together. I think they probably take on a larger percentage of your portfolio than historically they would, because we're going to go through both a challenging political time here in the United States, and we're going to go through, we've obviously got a geopolitical situation. So I would say...
But high interest rates were supposed to be the thing that was actually going to be unhelpful to Bitcoin.
Well, and I think on a relative basis, look what's happened to gold. It actually has been. Clearly, it suppressed it. So you know that more likely than not, we're going to go into recession. There's some pretty clear-cut recession trades. The easiest are the yield curve gets really steep. Term premium goes into the back ends of debt markets, right, into 30-year and 10-year and 7-year paper. The stock market typically right before a recession declines about 12%. That's probably going to happen at some point from some level. And you look at the big shorts in gold, more likely than not in a recession, the market's typically really long assets like Bitcoin and gold. So there's probably a $40 billion worth of buying that has to come in to gold at some point between now and if that recession actually occurs. So yeah, I like Bitcoin and I like gold right here.
So he spoke about if the recession occurs. I think a recession is coming. We just fundamentally disagree with the bears, and we don't hate the bears. We wish, you know, at the end of the day, we want everyone to make money. I've been on the wrong side of the market more times than I care to share. But ultimately, we disagree with sort of the demand destructive event. We don't think it comes until later on, and we've looked at a lot of things to sort of support that. And yeah, that's all I've got for you guys. I'm wishing you all a wonderful Wednesday. Don't forget to like, comment, and subscribe to the channel. Go check me out on Twitter at Allincrypto. Come over and check the website out. It truly is a great website. The response and the viewers we've had on this website are very encouraging. And it clearly shows that there's a demand for what we are doing at Real All in Crypto. Or on the website. So do come and check that out. And that's all I've got for you guys. I'm going to love and leave you. See you in the next one. Thanks for watching.